Michael Burry has made a massive shift. Warren Buffett has added a brand new position, one that we've analyzed in our course member live stream just 2 weeks ago. And boy, do I have some opinions on this position. Federal Reserve expectations, earnings from Walmart, Home Depot, and Monday.com are things we've got to talk about. And a crazy inflationary shocker that just came out this morning. Let's talk about all of this, as well as a quick little update on scumbag Sam Bankman-Fried. Folks, remember, 60% off coupon code linked down below. New lectures coming out in December, and they're going to be amazing for everything. The real estate course, stocks course, property management course, even the YouTube course. We'll have new lectures coming out in December with all of the Elite Hustler lectures with no monthly fee now. I listened to your advice. No monthly fee for the Elite Hustlers course coming out on Black Friday. So use that 60% off Black Friday coupon code. So what are the updates? Sam Bankman-Fried. Big scumbag. I think this guy deserves to sit next to Bernie Madoff. I am so terribly sorry I was ever associated with this guy. I failed and I effed up and I feel like crap daily about this. Okay, but at least there are alcohol passes on here. There's no driving. So, Sam Bankman-Fried, this guy is such a trickster that he is now screwing with the bots on Twitter. Here's how this works. If you delete a tweet on Twitter, there are bots that will post a screenshot of what you deleted. But not if your tweet count doesn't change and you trick the bots. So what's Sam Bankman-Fried doing? He's posting tweets one letter at a time at the same time as he's deleting old tweets and burying them. But he's been exposed already for doing this by the smart and quite critical people on Twitter, but it's quite interesting. And it just shows you how shady this guy is. Stagflation, 92, and these numbers might change after today's numbers, after today's inflationary numbers, but stagflation estimates are that 92% of all investors right now believe that we have a very real risk of stagflation. What does that mean? Well, dang, it means that a lot of people are pricing in pain for markets. Federal Reserve pricing is still sitting at an expectation that the Fed will hike to 5% and will likely hold at 5% all year long. Most major banks are sitting between a 4 to 5% terminal rate expectation, with Wells Fargo, Goldman Sachs, and Bloomberg coming in between 5 and 5.25%. JP Morgan 4.75, Morgan Stanley 4.5, Barclays 4.5, and Deutsche Bank 4%. Now remember, if those numbers, those estimates get moved down, markets go up. If those estimates move up, markets move down. It's very simple. In case you're wondering why the S&P 500 moves, everything has to do with expectations for the Federal Reserve. Now, before we talk about Warren Buffett and Michael Burry's crazy shift, I want to touch on some earnings really quick. Walmart finally only grew inventories at 12%. They're finally getting a handle on inventories. Transactions up. Remember, we don't look at sales anymore. Sales is a stupid number because when they're like, oh, sales are up 8%, we're like, oh, yeah, duh, inflation's up 8%. So your real growth is 0. So transactions actually up at Walmart. Especially the grocery division. So that's a 2.1% increase here. Their ad business up 30%. So they're actually growing decently on their ad business, which I don't actually know that much about their ad business, which is kind of fascinating because it is a newer aspect to their business, but most advertising businesses are actually suffering and declining right now on growth, although Trade Desk actually surprised and did pretty dang decently relative to how others are doing. Trade Desk and their CEO, which is, by the way, located in my hometown, Ventura, California, they actually argue that during these recessionary times, they think they'll be able to take more market share than some of the more traditional forms of advertising like Google or Facebook. I don't know if that's true, but that's what they argue. So a lot more people apparently going to Walmart, and when you get those middle to upper end consumers shifting down to Walmart, they can oftentimes be a little sticky in staying with Walmart. As far as Home Depot did not fare as well. Home Depot saw transactions decline quarter over quarter and gave a little bit of a weaker guide. There is a little bit of a sign that we're still seeing people spend at Home Depot because as they wrap up projects. I'm really wishing I can get some details on how many people are spending or how much money is being spent on things like moldings and paint, which are considered finished jobs in construction, compared to 2x4s, which are generally your raw material sort of beginning of projects, tasks, should I say, or purchases. I'd love to get some detail on that, but the earnings call is going on right now, so we don't have that yet, but pay attention to that. We are seeing lower guide, though, and inventory to sales spreads narrowing, suggesting slower or slipping orders and weaker demand demand in the future. Monday.com saw an inflection point in their customer resource management sales in September and October, and mentioned that what used to just be European stress is now starting to become global stress. We're seeing this from a lot of companies. A lot of companies are telling us that, oh yeah, all of a sudden in September and October we started hitting a wall. This doesn't really surprise me because we're finally actually seeing the impact of the Federal Reserve's tightening, and it really aligns with the layoffs we're seeing, especially the corporate layoffs at Amazon. Remember, these are not seasonal layoffs. We're actually seeing programmer layoffs, corporate layoffs. The Alexa division's getting hit hard. I think they might actually end up closing that entire division down. Apparently just not profitable to do voice yet. Sorry, Gary Vee. Federal Reserve, we already talked about Federal Reserve expectations. Hedge funds. Okay, we have a lot of hedge funds actually cutting Tesla. D1 cut its stake by 48%. Katow cut by 16%. A 48% cut is pretty large. One of the things to know is that Tesla has also slashed its orders, its order lead times to just 1 week. Now, I think the mainstream media is going to jump on this and go, oh my gosh, this is bad. Tesla lead times only 1 week. Look, Tesla demand plummeting. I actually think the opposite is going to happen. Of course, I'm a Tesla bull, so take what I say with a grain of salt. I always like to be aware of my biases, and of course, the biggest bias that I have is suggesting that you should check out those courses, because nobody works harder than I do, and nobody is going to provide you more value in those courses. If you don't see something that you expect to be in those courses, you make sure you write me a message in Discord, you tag me, and that lecture will be there by the end of the year. That's just what I'm doing. I'm going to keep making videos because I love y'all, and if it ain't there, you tag me in Discord. I'm going to go through it all by the end of this year, and we're going to have more lectures. We're using that blackboard until that blackboard breaks. But anyway, I think the mainstream media is going to go, oh, this is bad, demand down. I actually think it's going to be free advertising, because everybody's going to go, what? I only have to wait a week to get a Tesla? This is great news. Now, obviously, there is a risk that demand does collapse. If demand collapses, Tesla stock will collapse. Sorry, and sorry me. If demand does not collapse, which I think demand collapsing is like a 15% risk, if demand does not collapse, then I think Tesla surges, especially once the Twitter drama settles down. I think there's an 85% chance of that. Okay, now, let's talk about Warren Buffett, Michael Burry. Michael Burry, out of shorts. He's going heavy on private prisons, increasing his bets on the Geo Group, Core Civic, both private prisons, and Curate Retail. Private prison, he's also ditched Facebook and Google. Interesting that he ditched Google. I mean, Facebook I don't blame him for. I think that's a stupid bet on the metaverse. But anyway, okay, my take on private prisons. Look, I remember debating private prisons back when I was in high school, which, was only a couple years ago. Just kidding. But I used to debate private prisons in speech and debate in student congress. And listen, the amount of debate that has gone into private prisons will probably never end. I think our political environment is such that we can make no radical changes, and I am highly, let me put it this way. I'm in disbelief that our government will ever actually fully move over to private prisons. But then again, hey, there are private prisons, so maybe these companies can make really good money without really government expansion. I just see it as a little bit of kind of like a marijuana play where you're relying on the government. And anytime you're relying on the government, you're relying on political chance. And dude, political chance, I don't know. But we do think that Trump will announce his presidential campaign tonight. Hedge funds cut Amazon. Actually in a mixed way. 9 million shares bought on net. 121 funds increased their positions. 100 decreased their positions. Princeton, completely sold out of Lithium America, has cut their entire stake. I ran the numbers because I've seen lithium prices run up a lot. I think the amount of lithium that goes into a Tesla battery for a car is only like $400 or $500, which is kind of interesting because we've seen lithium prices skyrocket over the past few months, and I'm like, oh man, that's going to squeeze margins for Tesla. But then I'm like, but if prices go up 20% for lithium, it really only costs maybe $80 more for a battery. Now, I mean, that's still something, but it's not as big of a component as I thought it was for Tesla, which is good news there. Berkshire Hathaway, Warren Buffett, adds a bit more Chevron, upped his stake 23% on Occidental, and decreased his Activision bet by 12%. Remember, his Activision bet is a bet that Activision will be acquired. I think it's for like in the $90 or something like that. It's an arbitrage bet. Viking adds to Salesforce, and Michael Burry, I think I already mentioned, has no shorts. That sounds weird. Anyway, okay, now. We got to talk about the inflationary numbers. Okay, so we had really good CPI numbers, right? So what came after these really good CPI numbers? Well, today, producer price numbers. So CPI is from the consumer's perspective. Producer is from the seller's perspective. Okay, so there's a buyer, like you and me, going to buy a PC at, let's say, Walmart or Best Buy. Actually, I'm not sure why you would buy a PC there versus just building your own or buying it online, but definitely not, well, I'm not going to say anything anymore. Kevin with the tangents. The seller's perspective would be like Walmart's perspective. How much is it costing them to go buy that PC to put on the shelf, right? Okay, expectation was core, month over month, 0.3%. We got 0, baby, flat. Let's go. We were expecting headline 0.4%, which would be 4.8% annualized. We got 0.2. That's 2.4% annualized. Let's go. Very, very good. And headline year over year expecting 8.3, and we got 8. Both really, really good numbers. Manufacturing survey came in much higher than expected. We were expecting negative 6% for manufacturing, which is sort of a recessionary indicator. We got 4.5% with prices little changed. And the first, folks, for PPI, the first services decline in producer price inflation readings with a reading of 0.1% negative. First decline since November of 2020. So obviously markets are rallying hard on this. Yields for treasuries are plummeting. This is phenomenal news. This is great news. Very, very bullish, obviously, for cyclicals, growth. And let's see if we can sustain it between now through December. But this is a second data point now that's really, really good. And if this holds up in December, we're going back to the moon, baby. Get that 60% off. Link down below, folks. I'm my own sponsor. I love being my own sponsor. And talk Sam Bankman-Fried. See ya. Bye.